Ladies and gentlemen of the crypto space, we're live on Monday, October 24th at 11:31 a.m. And we're off to a start of a week. We have a Fed blackout. When's the last time we've seen a tweet from some sort of comment from a governor? We see a little bit of yelling. We see Merrick Garland coming on and Biden probably later today. And we have national security shit all over the place, screaming that there's risk coming at us from every possible direction. And in the end, unfortunately, everything goes up. Unfortunately, listen, if there's no businesses to use a currency, it doesn't matter how much currency you have. It's kind of like Venezuela, where the stock market just went completely vertical, but it's an absolutely decimated system. And sure, maybe you have disparity where the few have been able to accumulate enough of the currency that it's irrelevant how much inflation there's been, but that's just a completely devastated type of situation. So in the end, what happens when currencies around the world and current countries around the world, their economies fail? The capital flows from underperforming to outperforming. So if their entire currency, their bond market, their infrastructure, their financial infrastructure is having either a cataclysmic seismic event or a collapse, what's outperforming? Clearly the US. And this is like Brent Johnson's narrative in most regards. Um, in the end, everything floods into the dollar, the bond market, gold, US equities, and the crypto space because that's outside money, as Arthur Hayes talks about, relative to them. That's money outside of their system. And that's, in many regards, a good part of not what we see in the bond market, and until it reverses, and it's not at the end yet because we don't see a melt up in equities, but we're talking about what people are talking about a melt up in equities, and but we see still it's just mostly a correlation between equities and the bond market, where you have a depreciation in equities as well as a depreciation in the bond market. So we're not at the end yet, but everyone hoping for a melt up, and that would be extreme Bitcoin prices as well if there's significant debasement of the currency to finance deficit spending. Because if the U.S. can't export bonds, export inflation, if the international community doesn't purchase the debt to finance deficit spending, we're just going to run it on the balance sheet. Maybe they create a special purpose vehicle, and it's not on the balance sheet directly, but everyone knows it's on the balance sheet, and there everything goes. There, everything goes, and we have yet another cycle of irrational exuberance and all the stuff that everyone is wanting. But, you know, if that occurs, that's not good from a global stability standpoint. It's not good from a national security standpoint. That's not good from I'm worried about my physical safety standpoint. And everything is getting so polarized. Everyone's anxiety is at an extreme. And that's when irrational events occur, either internationally or domestically. And that's not necessarily an exciting time. So we could have an extreme outperformance of everything, of outside money, which is the entire damn crypto space. And that would be scary. It would be exciting from a financial perspective, but what good is a financial perspective if everything is scary? If we're geopolitically scary? So that's where we're at. That's the polar extremity of the situation. We're literally at the farthest extreme you could possibly imagine of a financial system, a global financial system getting stretched to the point of completely fracturing. Every narrative we talked about over the last 2 years is still in play. Debt to GDP, global debt outstanding. I mean, mortgage rates, didn't they just cross 8%? Oh, you just get a smaller home. No, I appreciate that narrative, but we're talking about the margins. Everyone, the pros talk about everything happens at the margin. Sure, a good part of the population still continues to get a mortgage at 8% and they get a tiny little apartment. But that's going to significantly decrease the total quantity of financial activity, the total quantity of mortgages, and that's going to significantly decrease M2 expansion, which is going to contribute to disinflationary growth of M2, if not a continuation of contraction, deflation, and that's devastating. So, we're at the point where Yellen's explicitly saying they're thinking about doing things to ensure the normal flow of capital in U.S. sovereign debt markets. It's literally that's what we're hearing today, and we're hearing no Fed governors, but we're hearing Yellen talk about the bond market. And let's go over to the bond market, and that's pushing right up against 4.3 again. You know, I this is on the weekly, so this does not look like a top formation. This doesn't look like a top formation at all. And I'm not up to date with what the hell's going on in England, but we see the interventions going on in Japan, and you can see that obviously in the chart of the dollar versus the yen. Now, all that intervention, if you go over to the daily, look at where they intervened. They literally twapped. Uh, the Bank of Japan literally twapped. The big, thick green line, that's the time-weighted average price for the dollar versus the yen. And it's right up, literally, you can't make it up. The Bank of Japan twapped into the yen. Oh, so this is horrible. Come on, it's horrible for Japan. Their purchasing power is destroyed relative in the goods and services they need to buy outside of the country. And even if they're buying some shit domestically, that's going to be influenced from products that they have to purchase from outside the country. Everything domestically is influenced by uh, dependence on imports. This is horrible, and it's horrible for what's going on in England. So I have all this mixed sense of emotion relative to the reality of what's going on. It's an absolute catastrophe in England. It's a catastrophe in Europe, and it's not just you know they you see charts where energy prices are contracting and collapsing, and some of them are going negative at this point over in Europe. And sure, you see the lower number, and you're like, oh, okay, things are stabilized and they're going to make it. Look at that volatility. You can have not have a normal financial system. Things are not normal with things going up and down. It creates anxiety and it dislocates pricing. It creates ripples and waves of activity. It's volatility by definition, but you can imagine if energy prices skyrocket like that and then come crashing down, what does that do? How do you operate normally? Isn't there a risk that there's going to be a shortage of supply and then energy prices skyrocket again? They just skyrocketed, so now everything related to business is preparing for the potential for energy prices to skyrocket. So now everyone is conservative and storing, and there you go, deflationary pressure across the entire economy, preparing for shit to hit the fan again. So it's very complicated what's going on. Let's hit some questions. We'll look over the standard charts. I'll give my opinion about things that I'm doing, aside from my plumbing leak, which I finally fixed up, which is very nice. I don't have a single pipe going under this house. I clipped all the pipes going onto this house. I got one pipe going from the wall to the island, and that just is going through the not the foundation, but it's going through the slab. So we dug a channel in the slab. So I got one brand new pipe going through the slab. So I'm cool there. I'm good with pipes in this damn house. And now I just have to do a shitload of sheetrock work, which I'm probably going to do myself. Not too hard to do sheetrock work. The problem is I'm digressing. I'm digressing. But this whole damn thing in Florida, everyone loves knockdown. What do you guys know about knockdown? So the whole house is covered in knockdown. So I'm gonna probably pull together all my will and I'm gonna plaster the crap out of everything and we'll paint everything nice and flat. I don't know what's up with Florida and knockdown. It's everywhere. George is in the house. A pleasure. Kill us. Jesse, yeah, woohoo. Let the printer go burr, maybe. Maybe. It's not as simple as that. And clearly, maybe, I just expect. So, what do I know? I know that directionality persists until capitulation. So, not regarding financials, but regarding geopolitical complexity, the directionality is disturbing. It's horrible. So where does that capitulation? The capitulation is some sort of hot war, not a cold war, but a hot war, and that no one wants. And even if that's high, so war is highly inflationary because that under those such extreme conditions, that all governments around the world pull out all the stops, and there you go. There's the flood of capital because they have to fight a war effort. So that's horrible. But that's where we're at. And that's the world we're living in right now. And I don't want that for my kids at all. That's the type of thing that's always on the back of my mind. But speaking of that, we have portfolios. So obviously they do well. So I might have a missile going over our head, but curve's going to $50. So that's where we're at. Shisha, yes, I did. I got free capital that I have optionality with. I purchased Ethereum. And I've always been a very conservative allocator. So I've allocated 50% of my free capital to Ethereum, just holding it spot. And something has always been on my mind with regard to Frax, but I think it's big, and a lot of my friends in the crypto space, you guys know the names, have taken a liking to the narrative that FXS ETH could potentially garner a significant amount of attention compared to ST ETH as well as R ETH, particularly because of Frax's complete ownership, basically, or very strong control over the Curve money printer and the Curve incentive system, their financial regime. So that entails that the FXS ETH pools can receive a significant amount of incentive. And if they're receiving a significant amount of incentive, and there's a lot of FXS ETH in LP positions, what do you think the yield is going to be on staked SFXS ETH? Basically like an ST ETH. Then that'll get the inflation or the revenue from Ethereum node validation. So that'll juice that revenue too. So to my understanding, that's the way the revenue is going to be. Unless you stake your FXS ETH, you're not going to get the node revenue, the validation revenue. So that means you got folks participating over here getting all their LP incentivized returns, but then you got the stake portion that are going to be getting outsized returns compared to ST ETH as well as R ETH. So that's quite fascinating to think through uh, the volatility that's going to occur in the markets with potentially billions of dollars worth of capital trying to find a level ground. You think about, capital flows in here, but that's going to just be a large amount of capital and it's going to slosh around and then slosh back. So there's going to be a huge amount of volume flowing through the AMMs. So that's quite tantalizing to think about from an optimistic standpoint of, oh, we're finally going to see some sort of activity going on. Finally going to see some activity. First time in a little bit. Certainly welcomed. Gazika's in the house, Dan's in the house. Sheesh, amazing content as always. Big inspiration for me. Well, we could do better. And I certainly have never ever said I have done the best, but we can always do better. So we have to be humble in that regard. And there's no perfect decision, and there's decisions we make based on hindsight and experience, and we only ever know in hindsight whether we made a damn good decision or not. So that brings us to today and all the insanity going on. Um, Mix in the house, Captain Sergio present. What do you think about LUSD Chicken Bond paying 70% APR on LUSD? Ooh. So what do I do with my Ethereum now that I have a fair amount of Ethereum at this point? I'm kind of inspired. Maybe I didn't. There's no way I inspired Tetradown. That boy's been doing what he's been doing maybe longer than I have. Uh, Back with the Ethereum ICO, which I wasn't part of. So coincidentally, our portfolios are actually very, very similar structurally. And I think a lot of our thought processes are very similar. So with all my Ethereum, boom, liquidity, boom, chicken bonds, call it a day. There you go. Very interesting. What do you think about the increase in swap line usage between the Fed and Switzerland? Jeff Snyder talks about that the best. Um, it's very easy for it to not be Swiss stress. Switzerland is a financial hub of the world, and it could easily be banks everywhere in Europe uh, going to the Swiss National Bank, bidding on the swap line auctions. At least that's what he mentioned, and I think that is clearly rational. Everything the man says is rational, and he's probably the best understanding of the global financial system of almost anyone at this point. So that's my sentiment in that regard. We could easily be on the verge of systemic crisis all over the place. But is that something new? Am I telling you guys something new? We all know there's ammo flying everywhere and everything's ready to completely collapse and max short in the equities market, historic shorts. Every retail person is short the market. And that's just the type of condition that is potentially conducive with a melt up. But a melt up, and the melt up is conducive with an outperformance, and if the rest of the world is doing shitty, capital flows from underperformance to outperformance, oh, the rest of the world's going to be doing increasingly shitty if the U.S. has a period of outperformance. And now those markets are going to be completely neutered, and that just adds to geopolitical complexity. Geopolitics is at its most extreme when people and countries are put under pressure. You back a country into a corner, the same thing as backing a human into a corner. You back a human into a corner, they do what they need to do for survival. And that's exactly what occurs with countries. And that's what's going on. So it's quite disconcerting, speaking as a father. Raul's in the house. Tapsy, good morning. Victor, Hilda, always a pleasure. George, you know you got yourself an undoxed address. An un No, I mean, everyone knows probably. I don't explicitly state what it is. Oh, is that a question? Uh, you know, but people could probably dig it up if they want to. I don't explicitly, advertise it. But maybe I will. There's always that unsettling feeling of everyone knowing my affairs, and it's not that I could care less about my uh, very much appreciated audience and followers knowing exactly the structure of the portfolio. I could care less there. The concern is always about the unsavory persons on the planet, and it's just, what's to be concerned about? There's obviously other. Anyway, that's the rationale. There's other persons that have are larger targets, but I just that's the whole world we live in. And that's why some people remain private and pseudo-anonymous or completely anonymous. But I understand what you're looking for, George. We'll talk about it on the forum. We'll see. I used to post the portfolio manually. Maybe I'll get back to doing that. We'll see what we do. Michael, hey, always a pleasure. Let's see where we are in the chart of truth for the crypto space. Curve holding on to almost 90 cents. Now listen, this is the monthly chart. You see, it's still a relatively new asset because you go over to not Ethereum, but you go over to stuff like ES, and there's hundreds of years ahead. Well, let's see what kind of history is provided here. At least on TradingView, it goes back to 1998. But obviously, the stock market, you got hundreds of years of history. This is a brand new freaking asset that has bars, literally a couple of bars of history. But this is very interesting. One, it's a higher low. Two, it's a second higher low. It's on trend. So clearly we have two large volatility spikes to the upside, but that's the exact same thing that happened with Bitcoin and Ethereum. Let's go to the non-log chart. Well, this is on the monthly, but there's two large spikes, one, two. So it's the same thing. All the charts across market sectors have the similar presentation. DeFi summer, leading into December of 21. And, I have a high opinion of where we are technically, but certainly, fundamentals. when the story I tell about Curve has completely remains completely valid. It has no way, shape, or form invalidated. There is more to the story nowadays, obviously, since Aura and Balancer have come online. There's more to the story nowadays with Tapioca coming online. There's more to the story, even with solidly coming to mainnet. Velodrome's doing decent on Optimism. And what is the nature of these monetary systems that have been created? What is the nature of these currencies? And what is the capacity to capture dollars for liquidity to remain in the space, actively participating and pursuing opportunity? So obviously it's a negative sum game as liquidity is draining. Optimally it's a positive sum game, and that's when we get our bull market when capital starts to flow in. Let's take a look at stablecoin charts. Take a look here real quick. $146 billion. It's still draining. Still draining. Dominance USD inflows. Yeah, it's all outflows. Well, I mean, yeah, it's mostly outflows. Big outflows. 186 million. Oof. That's a heck of a line. Okay, so this is a chart that I consider very meaningful to get a sense of where we are and the potential for things to actually appreciate versus depreciate. There's no new capital, there's no fresh capital chasing opportunity. It's all existing capital. So what folks are doing is in actually a negative sum game, but let's talk zero sum game. They're chasing over the same unchanging amount of stablecoins, dollars in the system. So there's only so many dollars to go around. So what happens is during periods of time like this, you get concentration of wealth, where actors that are outperforming are accumulating more dollars, and the majority of other actors are losing the amount of stablecoins that they control. From an Arthur perspective and the global liquidity chart, it's hovering around the TWAP on the daily, but that's not very meaningful considering when data is released, it did hit basically right off the 200 EMA, whatever the hell that means. It is an average, so not that, because this is all subjective, meaning the components of the Fed balance sheet, the Treasury General account, as well as the repo market is literally just subjective decisions by those market actors. But then again, that's what a technical chart is, and then this is representation so far. I think it was 21.8% liquidity drain. I showed you that. And from top to bottom, from top in November 2015 to bottom in April of 2019. And coincidentally, that was the exact same amount of liquidity drained that we currently experienced, which was quite fascinating to see. Let's do that. Let's get it pretty close. Let's do one more. Is that irony? Is that coincidence? Is that fate or something? But look at that. It took 21.07% for the final capitulation in May of 2019 for them to start getting more liquidity into the system. You can't make this shit up. It is literally 21.07% from the top of liquidity in December of 21, and you all know that because that's when markets were hot, to the bottom where it just hit the 200 EMA. That you can't make this shit up, and everything is blowing up everywhere. What does that mean? Well, one, I don't believe in coincidences. Two, I don't believe this is like specifically intentionally manifested or artificial in any regard. But it's like, whoa, I think it's indicative of the fact that if you drain 21.07% of liquidity from a system that is this indebted, it's going to blow shit up. It's freaking wild that it's literally 21.07%. That's crazy. You can't make that up. You can't make that. That's just the coincidence of all coincidences. And I don't believe in them. Can you please have a look at the S&P versus BTC M2? Yeah, let's take a look at that one. I haven't looked at that one in a long time. So we never breached 2006 highs. 2007, November 2007. You guys, it's quite an interesting. It's quite interesting. Let's get a trend line there. Never breached it. Those are failed breakouts. In January of 2020, and then January 2022. Failed breakouts, never got back above, and this is clearly dot-com bubble in 2000. Now, this is a stagnant chart. There's been no growth of the entire equity space at all, denominated in the currency supply. So the as in there's X amount of pie, and the equity space has never been able to accumulate more of that pie in all these years. Quite extraordinary. Let's look at Bitcoin. Do I not have a Bitcoin chart? Let's see if I have a Bitcoin chart. Yeah. Let's zoom out. See, we did break the trend line. The trend line of all trend lines. So it's a precarious spot, but that could easily be a failed breakdown. But let's do a little M2SL study stock, which is very comparable. But we're well above the 100 SMA on this particular denomination. Back in March of 2020, we capitulated significantly below the 200 SMA on the weekly, and we have trended significantly below the 200 SMA yet again in a descending triangle formation. That's clearly a very descending triangle formation. We're below the TWAP still on the weekly. Let's take a look at the daily. Are we going to breach anything to the upside? That'd be nice. We're still below the 100 SMA, as well as the 50 SMA on the daily. Clearly well below the 200 SMA. Let's go down to the 4-hour. Oh, this is a spread. I don't have access. I paid them enough. Okay, well, this is where we are. Let's take off log. Nothing more interesting. We're stuck. I think everything is going to play out as macro plays out. And it's everything as we started the stream. How do I think plays? How do I think things play out? Rewind to the beginning of the stream, and that's where we are at. It's a binary situation, boys and girls. Either everything is going to go down, or it could potentially go extremely higher as the rest of the world is worse off than the US. Capital flows from underperforming to outperforming, so therefore capital flows into speculatively the bond market, the risk market, US equities, and the crypto space because the crypto space is outside money. And that would be really, really awkward to see external capital, international capital flow into equities and the bond market simultaneously, and to see bonds and equities rally simultaneously after equities and bonds collapsed simultaneously. And the first time in history, first time in any metric that's available, where the US bond market collapsed more than the equities markets. So certainly unprecedented time. So I would have put it out there that it can't happen again. A rally of the bond market with the equities markets and the crypto space. And the bond market, the US bond market becomes a risk asset. That's freaking weird, bro. That's weird. Can you please have a look at the S&P? Hit you, George. Good to go. Joshua, pleasure. On a flight from Orlando to Dallas. Always a pleasure. It's a good flight. Good flight. Curious as to why Bribe seemed to drop in value after the dispersion period, but then seemingly uptick in value before the voting period ends. Seems to happen more often than not. It depends on the Bribe protocol. Maybe you're talking about Hidden Hand and the Aura Balancer Federation. I don't know. I have it's quite lucrative. Aura VL Aura incentives are quite lucrative. 75% of LP revenue goes to Hidden Hand, so the integration or the coordination between Balancer and Hidden Hand is quite interesting to see, to say the least. How the entire Aura Balancer Federation plays out, I think, is yet to be seen because VE Bao doesn't have a bid. Nobody's really bribing at the VE bat level. It's not like there's significant bribes at the VE curve level. I think people are just getting a taste for things and how they function. So I don't have a clear picture on how things play out regarding the aura balance of federation as compared to the curve federation, but they are clearly two federations. There's a growing list of participants in the curve federation, growing list of participants in the aura federation. But note that I say the aura federation. Is it really the balance of federation? But yeah, clearly convex is the same as aura structurally. So there's the similarities. But is there a difference? You'll only know after we see how things play out. It will take some time. But I think balancer and aura evolve in a slightly different direction as compared to the curve federation. I'm very curious to see how solid in mainnet goes. I'm curious to see, not so much, I guess, how Velodrome goes on Optimism. Maybe is it the same team? Is it the same code changes? I'm hopeful there's some interesting tokenomics that play out in solidly mainnet. I have no interest in taking any additional position. Everything is all that capital that had been obliterated and deflated, and hopefully it reinflates. So it's a nicely sized position. And that's everything that was burned on Phantom and is going to magically reappear on mainnet and hopefully have some value. I mean, frankly, if the amount of capital that remains at the spot prices of the assets gets reminted on mainnet because they're burned, plays out anything comparable to Velodrome, oh well, I'm not going to be complaining. So that'd be nice to see on mainnet. I'm a big advocate of mainnet. I think Optimism and Arbitrum are playgrounds that are wonderful, and there's going to be a huge amount of financial activity on them. But my sentiment and my interaction and activity will probably be predominantly on mainnet. Mainnet's where the big capital is, and that's the playground that I want to operate in. Um, that's the deal in that regard. Any idea on how solid locked on Phantom will function regarding the solidly launch of Mandat? Oh, hey Paul. I was just talking about this. Solidly's done on Phantom. Everything and anything regarding solidly on Phantom is done, deprecated, turned off. There was what would we have, a month or two to burn our solidly assets on Phantom, and that's over. So it's history. Anything that's left on Phantom is done. Um, but it's anything that was burned successfully prior to the end of the deadline will be reminted on mainnet. That's how that's going to play out. Joshua, noticed the Curve Bribe page, just interesting. So I follow Curve Bribes on Stake DAO. Um, I'm on the Warden at this point. So the Warden has 62% on. So I don't know. Whoever has a V curve position, this is where the bribes are. So you might as well catch them. There's a fair amount available. If you go over to the Warden, you see Dola here. There's a fair amount. They're still looking for 879,000 votes, paying. How much is it paying? Paying 26% APR. Listen, this is where it is. There's nothing else. There's nothing left on VE Bribe. There's nothing over here. There's no more. And Vodium has nothing. So if you're a VE curve position, you go into the Warden. So I'm hopeful actually that this protocol picks up more attention and uh, incentives. This is a nice user interface, and I really like what they did with the specific quantity of return per vote. So the, the person's providing the incentive, the protocols providing the incentive can specify the specific APR that they want people to receive, and they pay on a per vote basis. So this is a much more robust system as compared to the original one by Andre, the Bribe, Bribe.crv.finance, and even it's better than the Vodium implementation. Not no discredit to Vodium and what they did, and we appreciate that. This is much more robust what the Warden and Paladin team have done. The Bribe wars are great, currently providing the cash flow for the VE curve until the liquidity comes back. Listen, the VE curve, I expect, what do you say in 5, 10 years? I expect incentives to be basically diluted to nothingness. And I'm hopeful to see 10, 50, $100 billion going through Curve. Come on, the basement, you could easily see $100 billion a day going through Curve, maybe in 10 years, right? 5 years, 5 billion. We've seen 3 billion. We've seen $3, $4 billion a day go through Curve. Obviously, in a spike, but what happens with 3, 4, 5, 10 billion on a daily, on an average? And then into the future. So V curve, yeah, you could be diluted 50% as the rest of the token emissions come out. But 50% dilution doesn't mean much if you get in $10 billion a day in transaction revenue or transaction volume, getting revenue from $10 billion a day in volume. So I'm quite intrigued about the future of how things play out. And the beauty of it is where, you know, um, Aura and Balancer maybe aren't in the same position, is the immutability of contracts. And a core focus of everything that Curve has ever done was for it to be deployed and it to function without human intervention. So that is something that they talk about quite a lot, the immutability of the contracts. Now that's something that's extraordinary that Curve has created. They cannot be changed. They cannot be modified. They cannot be interfered with. If somebody wants to modify something, they got to get into governance, and that's the deal. Something needs to be deployed. I don't know the nuances of that, but generally speaking, for something to be deployed, it has to go through governance, and that means a person has to buy a seat at the table so they can have the required votes to get something passed, and that's quite tantalizing from a large corporate institution and nation state perspective. Very interesting. Nothing, no one comes close to the comfortability of base layer infrastructure than Curve. I mean, clearly, folks, and companies, and protocols are going to want to build on Aura and Balancer. So I'm not saying that's not infrastructure, but if you're like thinking raw, base layer, immutable, no one's gonna could fuck with the code, and it's just rock solid, time tested, mother approved, and that has Curve written all over it. Noah, as a student of macroeconomics, why don't you have a bigger Ethereum stack since the merge has the best monetary system of all crypto? I have a large Ethereum stack. I acquired it, I believe, this morning, actually. So I needed the capital. I had a lot of my capital locked up in a VL CDX position. That was liquidated. I liquidated my Aura position. That's cool. I don't want to outperform significantly. I don't want to make the most money possible. I want to follow the story. I want to follow the narrative. I want to be reasonable. I want to be logical. I want to be prudent. I want growth. I don't want hyper growth. I clearly, when the market gets exuberant, I'm going to take little positions here and there. I'm going to have fun. I'm going to experiment. I'm going to play with all the protocols. I'm going to do everything that we've always done and other people do much more than I do. But I'm the restricted person of the crypto space. I'm the old guy in many regards. And that's the way I want to be. And that's what brings me my comfort, knowing that I'm the reserved actor of these markets. So I have moderate size Ethereum. I would love to have the size that Tetranode has, but I don't. But I'll keep doing the streams and I'll keep telling you my stories, no matter what. Ladies and gentlemen, 37 people in the streams, 15 likes. We can do a little bit better, can't we? Hit those like buttons, please. Monday, October 24th at 12:10 p.m. As always, I thank everyone for joining me. Tell everyone to subscribe because if they don't hear me, I cannot help them be more rational. After party on Discord for the most rational community in the entire crypto space. I wish you all a wonderful Monday. I will see you again at the end of the week on a Friday. Peace.